That's me. All right, so yeah, I do like going out in the field. Many of you who are my subscribers, and I keep bumping into you, so I know you're here. You know that, and have a lot of fun. I am, and again, if you're my subscribers, you know this, we are making money in two areas right now. Neither of them is precious metals. I mean, I was listening to the panel this morning, and I kept waiting for them to say something about either one of the things that are just making us tons of money, and they didn't. So the things that are making us money, one is cannabis. God, that's just a gold mine. In the middle of next year, it's going to be recreational legal in Canada, and you can see the money flowing in now. That's not what we're going to talk about today. Today, we're going to talk about energy metals. And man, is it making us some money. Now, right now, there's a shift going on in the world to electric cars. It's being driven by China, but other countries around the world are also into this as well. And it's reminiscent of when internal combustion engines replaced the horse and buggy at the beginning of the 20th century. And it's just bullish for so many different metals. Since January 2016, which was the bottom in the metals market, right? Cobalt's up 151%, lithium up 128%, copper up 49.9%, nickel up 37.2%. All of these things, with the exception of copper, go into lithium-ion batteries. Copper is important because an electric car uses 3 to 4 times as much copper as an internal combustion engine car does. So it's just enormous demand. It's driving these things up, and the stocks, or I should say select stocks that are in these, are just going bananas. And this is why the party is just getting started, and many people cannot grasp this. So it's nice to have this picture. In 2014, they had an inkling of how much of new huge factories for these batteries they'd have to build. 39 gigawatts worth. Then in 2015, they thought they'd have to build 70 gigawatts worth. Then in 2016, last year, they said, no, we're going to have to build 219 gigawatts worth. Now it's 372 gigawatts worth. They just added 6 more that they say they're going to build in the last 2 months. So what's going on here is a supercycle. I heard this morning someone say it isn't a supercycle. It is. It's a supercycle driven by a megatrend. The megatrend is electric vehicles, and the supercycle is in energy metals. And if you understand those things, it is your road to wealth. Because, man, these stocks are going crazy. All right, this chart is already out of date. It's really a lame headline, but it's the best I could come up with. In August, Bloomberg published this chart saying how much they expected demand for all these metals and graphite, which is not a metal, to actually increase. And but it's being surpassed by events, this tsunami of demand that is just coming on, driven by Asia. How big could this get? Well, if we built all cars as electric vehicles, that's what this chart is showing, okay? We'd see lithium demand surge by 2,898%, cobalt demand rise 1,928%, rare earths up, graphite up, nickel up. We're not going to see that, but it just gives you an example of how much demand potential there is in there. Because somewhere between what we got now and what we're going to have 20 years down the line, there is a huge distance, and it's going to have to be filled by miners around the world. All right, electric vehicles. Even though the price of lithium is going up, economies of scale in manufacturers are actually sending battery prices lower. This is something else you need to grasp, because if, like, people are saying, well, there's all this tremendous lithium demand, so the price of lithium will go way up, that'll drive the cost of electric vehicles up, and so then no one will be able to afford electric vehicles. That is wrong. Why? Because they're getting better and better and more efficient at actually making the batteries. And that's why the cost of a lithium-ion battery is 1/7 of what it was 5 years ago. And costs are going to keep going down. And in fact, at some point in the near future, the cost of an electric car without subsidies will be as cheap as the cost of one that runs on an internal combustion engine. And that is a car that you won't have to do all the maintenance on that you do with an internal combustion engine. So for many people, especially ones who are taking shorter rides and stuff like that, that's just going to be an obvious choice, especially in Asia and stuff like that. So the price of lithium could go up 1,000%, and the price of the battery would only rise 8%, and that's with current technology, and the technology changes all the time. Cobalt. Our biggest winner so far this year has been Katanga, which is a company in the Democratic Republic of Congo, which is not a very democratic place. I don't know why they named it that. But it's just done enormously well. And we've already taken half gains, and now it's up, what, 150%? I don't know. It was up another 7.5% on Friday. And the amazing thing about that stock is it just bounced higher off its 20-day moving average. I don't know if any of you use technical analysis. I do. There's an old saying, every sunken ship has a chart, so you can take it or leave it. But the last time this stock did that, it rose 40%. In a very short amount of time. So if you're doing technical analysis, not that history has to repeat, but it can rhyme, that one looks like it's taken off. So anyway, this is a company building a mine in the Democratic Republic of Congo. Glencore owns 86% of that company, but it is an independent company still. And the problem with building it in the Democratic Republic of Congo is life is miserable there for the workers. They use child labor, stuff like that. So the race is on to find cobalt supplies somewhere else in the world. Now, I just said all those horrible things about it, and yet we own the company. That's because I want to make my subscribers money. And like, you know, I don't rule the world. I'm not in charge of the Democratic Republic of Congo. But it's making us a lot of money. Nickel. All right. When people say lithium-ion battery, people think there's a lot of lithium in it. No. It's lithium is a very active part of it, but it's actually a very small part of what by weight of what goes into the battery. Lithium is also very light. That's another thing. So there's 5 times more nickel in a Tesla S battery than there is cobalt. Demand for nickel is projected to rise 50% by 2030. That's according to Glencore and others. Multiple industrial leaders in this space are making this prediction. And they aren't seeing it as a scam. They aren't seeing it as like some kind of thing that's going to fade away in 5 years. They see it as this is something real and happening, and they plan to profit off it. And demand is going to overwhelm inventories. I haven't found a great way to invest in nickel yet, but I'm going to find one. You can bet on that. Copper. We are invested in copper. Copper's doing great. I mean, as I said, there's no copper in a lithium-ion battery, but fully electronic vehicle cars can use 3 to 4 times the copper of a regular internal combustion engine car. And a report just came out in Bloomberg today. There's a company in India, Hindalco Industries. All right, they're in the copper business, so you have to take whatever they say with a grain of salt or a boulder. But they say that that demand for copper globally is going to jump 22% over the next 5 years. Only part of that is due to electric vehicles, but it'll still be 1.2 million tons per year for electric vehicles. That's what they see the demand there. Since they're India-based, they're focused on India, and they see a new industrial revolution there, or I should say electronic revolution, and so that's really what they're focused on. But they see the demand for copper just going through the roof. And how do you increase 22% of the copper supply? I don't think you do. There has to be something else. We'll see a price adjustment, of course. Some new technology will have to come along. Right now, we can't do that. Graphite. Oh my God, you have some great graphite companies here in Canada, and I'm going to tell you about one of them today. Graphite is a funny market because not all graphite is created equally. In fact, some graphite just plain sucks. There's a new mine that's just came on in Africa, and the size of that graphite is this little tiny grainy stuff that it might depress the low end of the market when supposedly large production from that mine comes on, but it's the large flake graphite. That's what is really, really important. And so if you're researching these companies, look for descriptions of how large their graphite flakes are, because that's what is actually going to determine what price they're going to get for the graphite they sell. And graphite is used in so many things. I was just talking to a gentleman this morning who was talking about, you know, how great his new fishing rod is, you know, which is graphite and it bends all over the place, and that's cool. But it's also used in lithium-ion batteries. And this is a good point to point out that We always hear about new battery technology coming down the road. There's a sulfur battery someone's working on and all this stuff. But it's all in the lab right now. If they do perfect it, it'll take at least 10 years for that to actually make its way into the marketplace, because they have to put that into the scheme of like what they're doing. And the next big innovation to come in batteries is the solid state lithium-ion battery that is being worked on by Toyota now. And the thing about that solid state, what's that mean? That means they're going to need a lot more lithium. So I've shown you how they're building all these factories around the world, and they're planning to build more factories. For quite some time, people are saying, well, these new mines are coming on, and that means that we'll actually have a surplus starting in 2018. And then they pushed it out to 2019. And then they pushed it out to 2020. Why? Because the demand keeps building. And they know that there's a squeeze coming on that is just doesn't show any sign of abating. Here are some fun facts. In last year, half of global lithium supplies went to energy storage, and that's a big thing too. It's not just electric cars. Energy storage is huge, and it's going to get much, much bigger. Bloomberg New Energy Finance forecasts that in just 8 years, EVs, which is what we call electric vehicles, they'll be just as cheap as internal combustion engine cars. And global demand for lithium is expected to rise threefold to 535,000 metric tons of lithium carbonate by 2025. But I have to tell you, that's an August number, and it might be higher now. That's the problem, is the estimates keep going up. So far, the estimates have been too low. A little more cobalt. Cobalt market is already in a deficit, right? Global supply is contracting. There is a new mine coming online next year, as I told you about. Annual cobalt demand is projected to increase 34% until 2026. And, is this bank right with like what they project? Frankly, I think they're just making their best guess. No one really knows, but we can see the trend, and the trend is incredibly bullish. All right, let's talk about China. China has mandated that 1 out of every 5 cars sold in the country be new energy vehicles, or NEVs, by 2025. NEV is China's category for pure electric and plug-in electric hybrid cars. Now, estimates are that 35 million vehicles will be sold in China by 2025. That's up from 28 million last year. That's the thing about the emerging markets, is they all want to drive like big fat Americans, right? So, they're all buying cars. But so more and more of them will be electric vehicles. So we're talking about 7 million NEV cars. That's up from 500,000 this year. And of the 500,000 sold in the past year, only 295,000 are fully electric. So that's a heck of a lot more demand. BYD, which is the world's largest electric car maker, recently told the press, this was just last month, that all new vehicles in China will be electrified by 2030. Now, he might be talking his book, or the fact that he's the head of the largest electric vehicle maker in China may mean that he knows something that other people don't. So, take it however you want, but obviously that's a trend you can rise. There are obstacles to this mega trend, and we have to be aware of that. One is the shortage of charging stations. This will be particularly acute in the United States because we don't invest money in infrastructure. It's a $2.7 trillion problem. That's how much it'll take to build out the global, worldwide charging infrastructure. But China is pushing ahead with a nationwide network to support 5 million EVs. California is taking action on its own to hike utility rates by $1 billion to pay for them. And actually, a big winner in that one might be the California utilities, because after they pay for the EV charging stations, they aren't going to lower rates, right? So that's actually a play on it that isn't a car maker. Volkswagen, they had a big scandal where it turns out that all their clean diesels were not clean, and so now they have to spend $2 billion actually building charging stations and other things across the US. That was part of the settlement. So there is also range anxiety, right? Is that your electric car will only go so far and then you have to recharge it. But GM and others are introducing vehicles that can go up to 200 miles before recharging. That's the next evolutionary step in electric vehicles. And also the tax plan, which is a nebulous thing, and God knows what it'll look like when it actually goes through the US Congress, but it may end a $7,500 per vehicle credit for plug-in vehicles. Other countries, however, from Norway, France, Germany, China, India. They're pushing EVs and they're giving tax credits for them. So we don't know what the final tax bill will look like. We're not sure what'll be in there, what'll be not. So I wouldn't actually focus on that so much. I would more focus on the fact that the rest of the world is actually speeding ahead with this. The biggest loser in the EV race, I believe it is Tesla. And the reason is, and I just realized I have a typo right there. Oh, my mom, who was an English teacher, would hate me write that. Oh, man. Anyway, why are they going to be the biggest loser? They seem to be a big winner right now. The reason is GM makes about as many cars in 3 days as Tesla made all of last year. And GM is moving in a big way into the EV space. Volkswagen is moving in a big way into the EV space. Volkswagen is the world's largest car maker. So as these other companies bring economies of scale into the market, Tesla is probably going to be facing a reckoning. I hate to say that. I love innovation, and Elon Musk, for any problems you may have with him, has really pushed ahead in this. But it is going to be survival of the fittest, and so I think they could be facing some problems there. Picks and energy metals. Last time I was here, in September, I recommended Lithium Americas, that just changed its symbol on the OTC QX, by the way. It's now LACDD. They did a 5-for-1 share consolidation, and the reason they did that and changed their symbol, and this just happened, by the way, Wednesday, the reason they did is because they are going to list on the New York Stock Exchange, which will make them one of 4 lithium miners that are on the New York Stock Exchange. And I think it's a good move because Lithium America's stock went up 14.5% on Friday. So these numbers here are from last Friday because basically I'm a lazy bum and I'm not going to update everything. So anyway, but as of last Friday, Lithium Americas was up 102%, and then Katanga was up 159% since my subscribers added them. And since I was here in September, they were up 23% and 32.7%, and that's before the 14.5% climb in Lithium Americas on Friday and the 7.5% climb in Katanga on Friday. So these did well. I don't know if anybody bought them when I recommended them. I still think they're buys. I don't have to recommend them to my subscribers because they already own them. But let me tell you something else, okay? Altura Mining, all right. This has a market cap of $127 million, and I feel a bit uncomfortable telling you folks in Canada about this because it doesn't have a Canada listing. And I'm also going to tell you how you can actually get this report if you want to for free. So if you don't have to take pictures of the screen unless you're posting it to Twitter or Facebook, in which case go ahead. Anyway, but it is listed on the ASX, ALTAF on the OTC, no Canada listing, as I said, so that's kind of a hardship for you, and I didn't think that through clearly. But it's going to start production in the first quarter of next year. That's even earlier than Lithium Americas. Lithium Americas is in the lithium triangle of South America. Altura is in Australia. Has a hard rock mine there. The mine is funded, and the company has $28 million in cash. It should produce a heck of a lot of lithium. One thing is it has 1.5 billion shares outstanding. There's obviously going to be a rollback, a consolidation there. Then again, Galaxy Resources did the same thing, and I own that one, and it's going, so, you know, obviously that doesn't hurt the stock. The next pick is Mason Graphite, which is a Canadian miner that is developing a high-grade graphite deposit. The most current mineral resource estimate has total measured and indicated resource of 65.7 million metric tons, grading 17.2% carbon graphite, and it's big flake. So the company owns a nice graphite project that's located in northeastern Quebec, and the nice thing about this is that the Quebec government's taking a very big interest in seeing this project put through. They think it's vital. The Canadian government thinks it's vital. They're also pushing it through. I love when governments throw money at things, at least things I'm invested in, because, you know, that just kind of makes you look like a genius. This has gone down since I recommended it, not that much. I expect these stocks to be volatile, so no big thing. That's me. If you go to EdelsonInstitute.com and just check on the customer service and ask for this presentation, they will send it to you. It's not a problem. It's actually posted on the web, but if I try and put that up, you'd all try and copy it down. It's not actually going to be easier. So just ask customer service for it. They'll send it to you. And I'm just about to run out of time, but I have time for one question. Does anyone have any questions? Yes?
When you saw the China, was that hybrid and electric?
Yes, because they consider that all one category, which is NEV. So they consider that all one group. And so there'll be a mix of things, but then again, this guy, Wang Chanfu, which is a great villain name, but he's not. He's actually a very nice man. But he seems to be hinting that there's more changes to come and that there'll be more all-electric stuff coming. Whether he's just talking his book, which I've tried to make clear, everybody involved in this business has their own agenda. So he might be talking his agenda, or since he has inside information to the government, he just might be letting you know what's actually going to happen. That's it for me. I hope you all enjoyed it. Have a good one. Thank you very much.